so in love with you.
Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and the question that I have is, when will we have an officially confirmed recession? And how much damage will be done to the housing market before the Federal Reserve pivots on the quantitative tightening? Now, the reason the Federal Reserve is killing the housing market is, quite frankly, because they have to. Over the last 2 to 2.5 years, the housing market has been artificially stimulated by COVID money. The equity accelerations broke every single fundamental and developed a similar sized bubble in half the time versus the 2008 great subprime collapse. So we're going to dig into a few of these things today, and I'm going to try to answer the questions: when will we be in an official recession, and when will the Federal Reserve pivot? But remember, you guys, I'm not your financial advisor, even if I want to be, even though my bio is as a realtor, loan officer, instructor, father, husband, victim of 2008. I had a foreclosure, bankruptcy, repo, and tax lien, and I got out of it slowly, and I'm back to where I have outstanding credit. I'm saving a lot of money, and I'm preparing to be a winner this time around. So you guys, please, for these efforts, like this video, subscribe if you haven't already. Don't leave me hanging, guys. Please shoot me a comment below. But other than that, let's get started right now. All right, you guys, so this is from CNN. I'm not trying to play politics here, but it's from CNN, okay? So don't beat me up in my emails and comment sections, please. Now, the name of the article is "The Fed is Killing the Housing Market." Obviously. Let's just jump right into this, guys. Let's see what they have to say. The U.S. economy grew by a 2.1% adjusted annual rate in the third quarter, bouncing back from two negative quarters and beating analysts' expectations just in time for midterms. This ultra-resilient economy stands in the face of the Federal Reserve's aggressive attempts to quell inflation by slowing growth through aggressive interest rates. But a quick look under the hood of Thursday's headline GDP number reveals a different story. The housing market is feeling the burden of central bank policies and crumbling under the extra weight. So what's happening? Mortgage rates rose again this week, topping 7% for the first time since 2002, or 2 decades. Those higher rates, fueled by the Federal Reserve's unprecedented campaign of hiking interest rates to tame soaring inflation, are beginning to choke the housing market. Sales of newly constructed homes dropped 10.9% in September from August, and were down, yikes, 17.6% from a year ago, according to the data released Wednesday. So again, to put things in perspective, interest rates are the highest they've been in over 20 years. Not to mention that this is the only time in history that interest rates have doubled in under 1 year. So put that in perspective, guys. And obviously, I hear people saying all the time, I had double-digit interest rates. The last time we had double-digit interest rates was in the 1990s, where homes were under $180,000. So not really a good way to compare, things, because obviously things are so much different right now. We have to take into account inflation and wage growth and all these other things. But regardless, guys, let's hop back into the article. The breakdown of third quarter economic growth by sector highlights the tremendous pressure housing is under. Residential investment, which is a proxy for both home building and home sales, contracted at a 26.4% annual rate between June and September, subtracting more than GDP than it has since 2007. So it's fair to say the housing market is what's going to throw us into recession, or the Federal Reserve, just depending on how you look at it. This tells us that we are seeing a significant pullback in both home buying and home building. The surge in mortgage rates and extremely high housing prices have led to massive pullbacks in first-time home purchasing and has pushed investors to the side. Housing activity and all of the activities that surround home buying are constrained by financial condition. Residential investment accounts for just 4% of the U.S. economy, but its sharp contraction had an outsized effect this quarter, pulling total growth down by 1.37% points. He expects this trend to continue into the next quarter of 2023. One of the characteristics of this cycle is that we've seen categories that generally have limited effect on GDP have large impacts due to massive swings. Downward spiral. Economists love to say the housing is the business cycle. The health of the housing sector is closely tied to the cost of borrowing, and so it makes sense that the Fed policy would weigh on home prices and sales earlier than other sectors. But housing is a bellwether for the rest of the economy, and those contractions will weigh on the broader U.S. growth. Expect to see the impact in fourth quarter GDP. Home ownership is the largest source of wealth among U.S. families, and so contraction means a real loss of wealth across the country. So you guys, the real question is, to me, is will we have negative GDP in Q4 of 2022? Now, I hope we do so that we can get the recession going, right? I'm sick of, passing the buck and kicking the can down the road. We need to start the recession and start resetting right now. And we need to do so with transparency and accountability from our officials. That's just my opinion. But again, you guys, I fear that we're not going to see negative GDP until Q1 of 2023. I hope that doesn't happen, but I fear it will. It is what it is. Let's jump back into the article and start finishing this out now. President Joe Biden cheered the economic report, which came less than 2 weeks before a continuous midterm election for Democrats. For months, doomsayers have been arguing that the U.S. economy is in recession, and congressional Republicans have been rooting for a downturn. But today, we got further evidence that our economy recovery is continuing to power forward. I'm not saying that. This article is quoting the president, okay? I'm not saying that. But overall, the report isn't as rosy as the headline numbers seem. That's because the overall figures were pushed by volatile international trade numbers. Next, exports were strong, but that's because the United States is importing fewer goods as demand dries up. In reality, the American consumer is starting to pull back. Household spending rose by 1.4% in the third quarter compared to 3% in the year earlier. But again, you guys, it should go up because inflation has everything completely out of control. So we're spending more because things cost a lot more money. Let's continue. Europe raises interest rates and issues a stark warning. The European Central Bank announced another massive interest rate hike on Thursday, increasing rates at the fastest pace in history of the euro currency in an attempt to fight aggressive inflation. Policymakers also presented an outlook in their meeting. They promised further hikes to come and forecasted an extended economic slowdown. The move will take the benchmark rate for the 19 countries using the euro to 1.5%. The Eurozone's annual rate of inflation hit a record 9.9% in September, up from 9.1% in August. So you guys can see the world is all messed up and they're not even peaked yet. I don't even know that we're peaked yet. I just don't trust the information. The unexpected and extraordinary rise in inflation had surprised policymakers. She said that increases in retail energy prices could push inflation even higher in the medium term. So again, you guys, how do we work on this when our leaders are essentially saying that the economy is in great shape powering forward? And I'm not getting political on you guys, but this just doesn't make sense to me. I believe, again, accountability and transparency. Give us the information so that we can properly prepare. We earned it. We elected people to be honest with us, right? Or did you elect people to get free money? I fear that a whole bunch of people voted for people so that because they assume they can get free money. It is what it is. I could be wrong about that. I don't want to get political. And the reason I don't want to get political is because no matter what, I don't trust anybody. And not only that, it creates an extreme prejudice towards each other. So I don't want any part of that, guys. I don't want these politicians to get in between you and I. All right, so let's finish out this article right now. A bad week for big tech. And you guys remember me saying that as a result of all this bad stuff happening to tech industries, there's going to be a lot of unemployment in these high growth areas because the migration into tech heavy metros was outrageous. So the fact that tech companies are getting destroyed right now is a sign of unemployment to come. Let's read this. Amazon stock plummeted 13% in pre-market trading on Thursday after the company posted weaker than expected earnings for the third quarter and scaled back its future sales outlook in its quarterly report. That is a big sign of a recession, guys, of things to come. The company warned that fourth quarter revenue was expected to come in between 140 to 148 billion, below analyst estimates of 155 billion. Even Apple wasn't immune to the curse of big tech. The company beat Wall Street expectations Thursday afternoon, but came up short of expectations for core product sales, including iPhone businesses and services. Shares rose 1% in pre-market trade. So again, you guys, these big tech companies doing the layoffs, like especially Facebook is right around the corner. Redfin's already started. That's going to really severely impact prices and values for homes in these high migration areas like Austin and Boise. So keep your eyes on those areas, because more than likely, guys, once the unemployment really starts to skyrocket in those areas, we're going to see substantial price declines in those housing markets. Now, my hope is that a recession is confirmed after Q1 of 2023, but in order for that to happen, we're going to need negative GDP in Q4 of 2022 and Q1 of 2023. However, I fear that we are not going to have negative GDP in Q4 and that the confirmed recession will be kicked down the road. So unfortunately, I suspect we will not have a confirmed recession until after Q2 of 2023. I also believe that as a result of a confirmed recession, the Federal Reserve will pivot at the same time. So I suspect the Federal Reserve to pivot Q3 of 2023. Now, other than that, you guys, I really hope you guys got some value, insight, and perspective from today's video. And if you're out there investing in real estate, I wish you luck and I hope you win.